Podcasts on UNC-TV.org are made possible through the financial contributions of viewers like you, who invite you to join them in supporting UNC-TV.
When reviewing home sales throughout North Carolina in recent years, what a difference 4 years can make. The North Carolina Association of Realtors reports in 2005 that $27 billion in properties were sold.
We became convinced that real estate prices at worst would slow their growth up. They would continue to decline. They would not fall.
By 2009, the State Association of Realtors says property sales topped only $16 billion. That's a lot of mortgages over those years. Most are good loans that are being paid, but thousands of properties would go into foreclosure.
So the housing sector has taken a big hit, and the downtrend, if you will, began about 5 years ago.
Why so many mortgages have gone bad is debated. State regulators and consumer advocates suggest mortgage companies in many cases might have misled some borrowers, especially those with bad credit, about their loan terms. Riskier mortgages carried higher interest rates enjoyed by investors who wanted to invest in the U.S. real estate boom. Borrowers like these unconventional mortgages because they offer the opportunity at home ownership or easy financing for investment properties.
What made them so popular, both for mortgage brokers to write up for people and for people who wanted to buy the house and they accepted it?
A lot of people have many different theories as to why subprime mortgages became popular. I think for me, I look at structurally in the financial markets and Wall Street, there was a great appetite among foreign investors for mortgage loans made to U.S. homeowners. And that machine had a big demand, and that then trickled down through the mortgage lenders and mortgage brokers, and it really led to them loosening up their requirements because they needed to make as many of these mortgages as people in China and other investors wanted to buy.
The traditional mortgage of decades past was soon joined by numerous creative mortgages. It helped more people buy property, and it fed investor appetite for investment products where the financial returns would be paid as mortgage holders paid their monthly notes. Mortgage brokers sold the mortgages just like a product is sold, and those backing or underwriting the mortgage would establish the qualification rules that brokers would follow.
Now, mortgage brokers basically sell that loan down the line. They sell it off to investors. That loan is then packaged with other loans, sliced and diced, and sold as securities. So your home loan could be owned by, investors across the country and pension funds, but also by investors in Dubai and China and all across the world.
Some subprime mortgages offered interest-only payments or the option to choose your monthly payment amount. Others would offer an initial fixed interest rate that became adjustable and would rise. Another mortgage allowed borrowers to qualify for a loan without proving their credit. These were called stated income mortgages. Critics called them something else.
You could make a loan to someone that didn't tell you what their income was. They didn't tell you if they had a job. They didn't tell you if they had any assets. In fact, they had a loan at the time that was called a ninja loan. They are loans called liar loans.
And these were loans that were clearly designed that there would be no ability to repay these loans, and that the only way you could deal with them was either to refinance, sell the house, or go into foreclosure. And we knew that once the refi option and the sale option went away, a lot of these folks were going into foreclosure.
Stated income loans back then were appropriate for the right person for the right reasons. It just became a big bold-faced lie after a while, and it was abused terribly.
Neil Finley is a 25-year mortgage industry veteran and the president of the North Carolina Association of Mortgage Professionals. For this interview, Mr. Finley says he's offering his professional opinion and is not speaking for the association.
Was there an option for most everybody who wanted to buy a house?
Pretty much. If you were in the market for a house at one time, there were products available, as I've mentioned, and some of them weren't appropriate, neither were the borrowers. But there was an endless number. And it wasn't just the inappropriate loans. Your mainstream lenders were offering different products, variations off of products that they created for their retail side that never existed before. A lot of people don't realize that a lot of the big lenders, they did stated income loans.
How many loans were only deemed inappropriate
after we look back on it in time?
When it comes to the subprime industry, probably almost all of them, quite frankly. You know, when you look at a loan that goes south or goes into foreclosure, the key as a broker lender is to look at that loan, and maybe it was made 3 years ago, and you say to yourself, given the information I had in the file at that time, would that loan be made again? And if you say yes, then, you know, the circumstances happen. Divorces happen. People lose jobs. Those situations you can't plan for. But, you know, some of the lenders will look back, all of them. There's plenty of guilt to go around, and will say, I have no idea what I was thinking about.
If you look at the way mortgage bankers were compensated for making mortgages, a lot of them work primarily for incentive, primarily for commission. And the more mortgages you complete, the higher the income you earn.
If that's your job, is that a bad thing to want to do that?
No, it's not. But then again, you've got to look at the underwriting standards there, or what we call the qualification standards. Oftentimes you can only write more loans if you relax your standards for qualification for credit.
If this particular lender doesn't give the borrower that loan and they've got the product, it's going to go right down the street, a block down the street to the next lender and get the loan. That may not be a great reason for making the loan, but if the products are available, but you've got to stay in business, you've got to compete.
And a lot of brokers say, hey, I'm just the last guy in the chain. I'm the guy that I'm just making the loans that the lender's offering, and it's not my job to make sure they're able to be repaid. And so you have two different views of the world, I think.
What responsibility fell on the mortgage broker?
There's a great difference of opinion on that issue as well. You know, in North Carolina, under the law, mortgage brokers have an obligation to represent the borrower and to help the borrower get access to a loan that is reasonably advantageous to that homeowner. Now, I think if you're originating a loan that's going to go into foreclosure, that's not really advantageous to the homeowner.
How much specific responsibility fell to the borrower, to the home buyer?
I think anybody who sat in a closing, at a real estate closing, knows that stack of paperwork is gigantic. Most people, even if they do read all the documents, they're incredibly difficult to understand, let alone then when you have somebody who's sitting across the table from you who is telling you, no, it looks like that, but it's not, or trying to sell you on the fact that this is a good loan for you. Folks went into the system trusting the system.
Mortgage industry veteran Neil Finley says mortgage brokers cannot make judgment calls on which borrowers deserve which type of loan.
Well, you have to have a reason. You're going to have to give them an adverse notice, what is called an adverse action, and it has to be a specific reason. It can't be, I just don't care for you, or I don't care for the loan. There has to be some situation, your income doesn't qualify, your credit doesn't qualify, you know, you haven't shown enough stability. There are a whole bunch of different reasons. But yes.
Even though you may personally think they didn't deserve a mortgage, if there was a product you offer that fit their needs and their profile, you would be obligated to help them achieve that if they wanted it?
Pretty much. You had people that did certain kinds of business. For instance, I've never done a subprime loan in my life. I did all what they call prime loans and FHA loans. But people who were in that industry, yeah, if there was a product available, regardless of who it was, they were going to put those people in the product. And just like any other industry, there were the share of bad actors that just did people a tremendous disservice.
Many experts from different policy and professional perspectives differ on the exact causes of why so many North Carolina mortgages have failed. They all agree, in this story at least, that no matter where you point the proverbial finger of blame, it's real people who are affected, and it's their homes that are lost.